What is going on, guys? We are already right into March. Holy crap! I can't believe how quick time is flying by. Uh, we've already cranked into January and February, which was also very, very good months for us. Thank God. I'll tell you, every single deal right now has something and is difficult, but we're grateful to have the deals. We're grateful to make things happen for our clients. We're going to go over a lot of different expectations in regards to what happened in the market last week, what's the expectations heading into this week, and take it from there. So the first thing we're going to discuss is the famous PCE report, Personal Consumption Expenditure Report. That came out and actually came in lower favorably than what we were expecting. We're going to dive deep into that. We're going to see also, in addition, that new home sales have simultaneously jumped up in value as well. Pending home sales actually obviously pulled back, which was accepted, which is a little bit of a turn of rates last month, kind of anticipated to that. Then we have home values, of course, continuing to move higher. We're now dealing with home values reaching anywhere from 5.5% to 6% in terms of appreciation. And this is simple economic demand, guys. We're going to see a lot of different fluctuations with rates. I think they're consistently going to be on a downward trend with the last PCE report. This week is going to be a big data employment week, right? So just this time last month, for context, rates kind of took a little bit of a turn because unemployment and employment came in with the BLS report, the Bureau of Labor Statistics, and it came in a little high, right? And the expectations was that there were so much jobs that were created, which made absolutely no sense to some of the other data that we were getting. But the truth of the matter is that's what happened. So that's where, today I went ahead and locked about 7 clients, set the proper expectations with every single one of them. One of them was a non-mortgable condo. Another one was FHA, 2 conventionals, and 1 VA buyer. All locked, all favorably. The FHAs were about anywhere, I think it was 6.5 to 6.75. One of the condos that we locked was roughly at a 6.875. So the rates are slowly starting to trickle down, right? We are slowly getting away from the 7s. If you're buying a single family owner occupied investment or multi, you're probably still leaning to that, but it's still fairly considerable to what we were looking at literally less than a month ago. Now, if we look at the Fed's favorite inflation measure, as I mentioned, their number one favorite inflation measure is the PCE report, the Personal Consumption Expenditure Report. And as we could see, I've been on a consistent decline truly for the last year. We're consistently on a downward trend. We had the headline number coming at 2.4, and the overall core year over year was at 2.8%. Remember, the Fed wants us to hit that 2% mark truly in order for us to be able to give a little bit more insight in regards to interest rates and cuts and all that nature, right? But we'll see. We remain steadily committed to bringing down inflation back to, like I said, that 2% goal. So we're slowly getting there. I don't think we're going to see any sharp drops. The Fed is definitely, in my opinion, going to cut. It's just a matter of the time frame in regards to when the cut is going to systematically go through. But you'll see here, so again, inflation only jumped up 0.3% year over year, dropping to 2.4%. This is what we were looking for. I'll tell you, if the PCE report, I shared a video, didn't come in as favorable or expectations of what we wanted, we could have probably been turning the other way in regards to rates going higher to 7.5%, 8%, right? Now, again, the Fed's obviously doing a very, very good job, in my opinion, of taming inflation. They stayed pretty aggressive with hiking 11 times, as we all know, from March of 22 until July of 2023. They have paused since then. It has obviously slowed the economy. We're almost as high as 7.1%. We're now at 2.8. Big difference of what we were expecting in terms of supply and demand and in terms of overall fluctuation. Now, the biggest question, of course, is the Fed finally admitting that, all right, rates have dropped, the federal funds rate, and should we drop it, I should say. And now that inflation is systematically going down, that's going to be the number one thing that we want to see, right? Now, when we talk about home sales, we could see, again, an increase both month over month, year over year, signed contracts of 661,000. Remember, there's a very, very big shortage of supply of homes right now, guys. And you guys can see with new homes, 106,000 not started, 270 grand that are currently under construction nationwide, and about 80,000 homes that are currently being created or have been completed. So we saw an uptick. So again, January's modest increase again wasn't as large as we wanted. Of course, it's usually colder around this time, so usually won't see that much. But again, demand for new construction continues to obviously push. Now we're seeing pending home sales. So pending home sales obviously took a little bit of a drawback, which we kind of expected obviously around this time. It usually does. Although the job market is very, very strong and very solid, we did see a little bit of sensitivity in regards to interest rates with the current cycle. And that's one of the main reasons why consumers had gone backtracked when it comes to that. Now, home prices. Let's check this out off the Case-Shiller report. Case-Shiller, which is one of the most reputable resources, goes and shows that home prices jumped up 0.2%. So ending the year, we're now at a 5.5% year over year from 2022 to 2023, on top of all the massive value that we've gained as well, right? The FHFA also came out and showed a 6.6% year over year, so anywhere from 5.5 to 6.6. So we'll kind of see Case-Shiller came in at 5.5. The Federal Housing Finance Agency came in at 6.6. And then Black Knight and CoreLogic both came in roughly close to the 5.5, 5.6. Okay. Again, showing the home price values consistently going up. Now, we talk about unemployment claims. Unemployment claims did indeed rise, rose by over 13,000 new unemployment claims that were filed. And then we started seeing a little bit of, obviously, a downturn when it comes to initial jobless claims, but it is kind of on a continuing trend. So people are continuing to file unemployment, which obviously makes a massive impact when we talk about some of the fluctuations in that regards, right? And then again, as I mentioned, what are we going to look for this week? We're going to keep an eye on for the employment data. So we really want to keep an eye and see what is happening with tomorrow. We have the JOLTS report, job opening and labor turnovers, how many jobs are currently open and how many labor turnovers and losses of jobs there are. Then we're going to get the following day, the ADP report, which measures private payroll. And then Thursday, we're going to be receiving initial jobless claims. And I believe it's Friday. We're also going to be receiving the Bureau of Labor Statistics. And that is what usually continues to impact the market. Hopefully it comes in favorable as to what we've been seeing with the PCE report to continue on this trend. Obviously, I'll keep you guys updated as always. Keep an eye out for some of our videos. If you guys have any questions or you would like us to comment on further things in addition, remember we shoot these lives twice, every Monday and every Wednesday. Wednesdays usually are wins, where we're going over client scenarios and client expectations. So the importance of understanding where mortgage bonds are going to transition and setting the proper expectations for our clients is critical. I appreciate you guys jumping on. Remember, I will always share these on our YouTube channel, so make sure you guys check out some of the past videos, and we'll take it from there. I'll talk to you guys soon.